What's going on, everyone? I hope you're well and doing great. Happy Wednesday. Looking forward to today's session. A lot to discuss. And I think it is a honeymoon type day for sure, as you all know, because you've been here each and every day with me ever since mid to late June. We've been able to decipher the turn taking place in the markets, making sure that we're able to stay on the right side. That is the goal of what we do here at CTM, to make sure we stay on the right side of the trade, on the right side of the markets. I want to start this off so with the dollar sign. I'm so proud of you and everything that you've accomplished, for all of your hard work, your work ethic, your dedication, everything that you have done, what you accomplished in getting funding. I'm so proud of you. Even better to hear that you are already achieved your first payout. And then after that, bi-weekly payouts really says a lot about you. Really grateful to have you here with us. Here we go. Wanted to start this off here. I have the DXY, and that's because we have this nice little trend line break. It's beautiful because we set this up from the beginning. You remember, I know you all remember, this is going back to July 13th. This was actually the last CPI print that we had. And on that CPI print, we had our second double black diamond entry. It's right over there. Around this time, many people were insistent that we were looking at 120 coming on the DXY because there was nothing in the way. I don't know. I just know that we follow price on the charts and trade what is happening. And it's been beautiful because that has helped us set up a few different things. By the way, this morning, probably most important, the September rate hike odds have gone from pricing in an 80% chance yesterday of a 75 basis points that was coming off of last Friday's jobs numbers, to now pricing in, what are we pricing in here? A 30% chance of a 75 basis points. It was a rather big move. It's almost assured now. Almost, nothing's for certain. That's for sure. It's almost assured now that in September, we will be looking at a 50 basis point hike by the Fed. And then after that, it's likely that we see November and even possibly in December, 25 basis points hikes. Those are not assured. We are data dependent going forward. We know this because ever since mid-June, that's the posture that we have held on to. Jerome Powell, in the last FOMC meeting, he then just went ahead and said, going forward, we're now data dependent. But here's the thing. Just as we were able to distinguish the turn taking place in some food and energy, right? Gasoline, crude oil, gas, food commodity prices, and watching those come off substantially, which led us to believe that there was a good probability that this print would come in a little bit lower than the last print of 9.1. Has everyone noticed that on that last super hot print, the markets have been rallying ever since, right? That was a very strong print, and it didn't send the markets down even lower. Instead, the markets are rallying, most likely because they are sensing that that's a near or intermediate term in the markets. Now, a lot of people in the markets have pretty strong views, and that's good. You want to have strong views. You know here that we're always learning to be a little bit more flexible, learning to let go of bias, and learning to make sure that we're able to consult all sides and then form our own opinion. A lot of people are almost a little bit indignant the fact that inflation is sticky. That's something that we believe. I do believe that you're not going to see prices go down. What we're watching, what the market is paying attention to, whether year over year, month over month, if you're seeing inflation continue to rise. And if that starts coming off year over year, it's not as if prices are going to come down, but it does give the Fed cover to go ahead and ease up on their tightening. And by the way, I don't think when we talk about Fed pivot, what a Fed pivot means to me is moving towards a pause. That's the Fed pivot. I do believe that quantitative tightening, which is supposed to pick up starting in September, will continue going forward. And I believe that continues until something breaks. just like last time. Last time, it was the overnight rate in the repo market, and that started balance sheet expansion, and that was the ticking time clock. It was about 6 months later into the global lockdowns, started the balance sheet expansion and quantitative easing. I just want to emphasize before we get into the charts this morning, the markets are not rallying on the CPI dropping to 8.5 year over year. There's a lot of people kind of like sarcastic today. They're like, could you believe that the markets are dropping because of an 8.5 reading year over year? No, that's not why they're dropping. They began dropping on last month's 9.1 CPI print because the market was deeming that that was the highest print in this current turn that's taking place. Now, again, you can't be stuck in absolutes. We don't know what next month brings. If you ask me right now, or not even ask me, I'm telling you, I do believe August is going to be lower than this print that we see today. We will continue to watch and see. And the reason why the markets are reacting off of that last month and then again today is because it is a near and possibly even an intermediate term peak in inflation, right? And Vu, Trung, thank you so much for affirming over here. We were, and it's true, all of us here together each and every day putting the work in. Massive effort we make each and every day to stay on the right side of the market. And we were there early, catching the early signal, right? We watched oil and natural gas, the early sell impulses taking place, the double black diamond sell impulse on the DXY, and we started watching all food-related commodities and the sell impulses taking place on that. I appreciate that, brother. I mean, look, that's beautiful of you. Thank you so much. But you know what? You're the person that's out there. You're the person that's doing it. You're the person executing. You're the person showing that discipline. You're the person who's showing that work ethic. We are all really, really, really proud of you. All right. Boom, 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 boom. Zach, always a pleasure. Thank you for your positive vibes, which help make this community such a pleasure. And that goes to each and every one of you without question. Watching this morning, let's jump over to the Nasdaq really quick. And you could see this is view on a log scale. And whether or not you want to drop down this lower band over here, I'd like where I put the lower band for a couple of reasons. And I want you to see over here, you can see where after the breakdown, you came into the resistance. And then on the way up, look, back down again resistance, again resistance, again resistance, and then support. So I kind of like leaving that line over there. But if you want to bring it down, you could go ahead and just bring it down like that. And it's the same thing. It's a channel, but what we're really focused in on is this portion of the channel. Price right now, this morning, while rallying, is into resistance. And we still have many hours of the trading day to go. It's still an unknown whether or not the Nasdaq gets this beautiful breakout over here. It's not only a breakout of that trend line. If we jump over to linear as well, and I could show you on the Nasdaq, you could see that we have above this resistance, right? We had the breakout, a retest, and a resumption off. We came in back for another retest, and you could see that it found the support right over here, just when it broke above on the first retest. It found support on that local resistance, turned to support. And now we're trying to resume off, but price has not made a higher high yet. Now, the Nasdaq is up 2.4% today. It's a big move coming off of yesterday's sell impulse, yesterday's defensive positioning, profit taking ahead of today's CPI print. We need to see follow through from here. We are at a current resistance in the markets, and the markets, obviously, there's nothing easy about them. Even though today is a honeymoon type day, and it's only because we remain on the right side of the markets, never take anything for granted. Always be watching your risk and be aware of your risk before looking at the upside and upside potential. S&P 500, you notice that we've also been talking about that it appears a little bit stronger. Now, I could look at the Nasdaq having a bigger gain today, a 2.4% gain compared to a 1.88% gain. But you could see that the S&P has made the resumption out, right? So you have the breakout, the retest of that broken resistance as support, a resumption up. Then ahead of the CPI, that level tested again, and this time a resumption up. The Nasdaq lagging a little behind for now. Interesting to see where we close on Friday and whether or not this trendline resistance is able to go ahead and actually break out to the upside, or indeed we roll over. Watch out in case we do roll over. Watch over here, yesterday's low, a break below that. That would be signaling that there's a good chance that indeed we are rolling over for whatever reason or whatever narrative might be placed afterwards. Boom. All right, let's keep going over here because it is a good morning to be here with you all. As always, looking at the 10-year, right? They came off pretty sharp on this morning's CPI, and now they've turned green, right? Pretty much unchanged on the day. Still, we could see technically below that yellow line, negative, going all the way back to July. We did a good job in catching the first sell impulse. I don't think I did a good job over here in taking profit, right? And then it got very dicey in this area. It became very hard to trade in this area over here. And we talked about how it was trading in a range. It was difficult to get any type of read. That's when we placed this yellow line. And since then, price has broken below it, coming for the retest. And again, now we need to wait for a resumption down to see whether or not that's going to be play. Will that happen before Jackson Hole? I have no idea. Adversely, watch this trend line over here, a break back above, and that signals us back into this range. And we'll just wait it out instead of trying to look for any type of opportunities or trades. Oil bouncing around today, now catching a bid. Look at that. That's interesting because oil was unchanged this morning after the CPI. It was barely positive, but now finally coming back into this trend line resistance over here. We'll have to watch. There's also horizontal where my mouse is right now. Some horizontal resistance. Get above there, get above 93, and this thing comes back into no man's land. Again, oil, that's something that we are watching as a very important factor to see what happens not only in the weeks, but most assuredly in the months ahead. Any oil going ahead and taking out the yearly high, trading back above 124. That's like alarm bells. The Fed would have to act and act strongly. So again, we can't get comfortable at any point in time. We got to keep working and putting the work in. So here's a look at just very quickly those same instruments we just looked at. Here's oil, right? Undergoing this current sell impulse. I know that our entry was a little better all the way at 119. We're viewing this with our stock preferred settings. Here you could see 10-year still holding on to its uptrend, and it's been very, very strong and powerful. The dollar finally coming off today. Our CTM 1.0 entry using the trend line, much better edge. You can see over there, right? Some people, or a lot of people, wondering, why do you not wait for the close to call it a trend line break? You know, everyone knows here in the crypto markets, we don't ever wait for the close. It's the trend line break is in the signal. Most other instruments, most other markets, you do wait for a close on the daily to confirm whether or not you have a break above or below resistance or support. However, this coming off of today's CPI, right? This coming off of seeing the September rate hike odds drastically changing. This seems to me to be the market repricing more appropriately, and at that point, that's where experience comes in. That's where you have the ability to make those type of calls, and that's the reason why. Let's jump back over to here and continue, and let's take a brief look at the Nasdaq. Again, Nasdaq right now is definitely in a bear market rally. Whether or not this goes any further or how much further, what is interesting to me, we talked about this yesterday, is price currently trading above the March lows. The March lows over here, this was after the FOMC, we saw a big bear market rally. That rip was sold very harshly and very quickly. My timing was off. This is when we should have looked to go ahead and look to sell that rip. and I looked for and waited for the March lows to be taken out. Nevertheless, price is now back above those lows. We had that retouch confirming retesting that broken resistance as support, and we're waiting to see whether or not price could break above and resume any higher at this point. S&P 500, very similar situation. Nothing to see or do over there. If you get the chance today, watching this on the replay, go ahead and smash the like button just for everything here, what we've accomplished, what we're doing, and as we move forward together stronger than ever, for my gratitude for you being here. Looking at what happened this morning with Bitcoin, most importantly, I think that, just not FOMOing. I think that for me this morning, watching the CPI, watching the print, I remember price, let's say going towards, up 1.5% and then up like 2.4%, pulling back to 1.7%. I wanted to take an entry over there. There's no question about it. I was looking for it. I wasn't looking for it. That's the place I would, but I had what a feeling not to have any sense of FOMO and knowing that the better move is to simply wait until we have our systematic signal and follow that. That right there, that peace of mind, that calmness, that confidence, that assuredness, that right there, that's the holy grail, knowing when to be in the market, when to be out of the market, and on what side. And I have to tell you, I do not care if this trade goes up, because we're looking at another, right now we're looking at another 7 hours to our next potential entry. If price is up, 5-10, it wouldn't bother me whatsoever in knowing in the long run, we're going to be positioned correctly. It's a beautiful, beautiful thing. And we talked about it yesterday, but you could see it occurring on Ethereum. Ethereum, we were talking about in yesterday's session, why discretionary versus mechanical. And it just happens to be another case of the system CTM 2.0 keeping you in the trade longer than you imagined it would. It's absolutely beautiful. I have over here, I got to get this off. And we saw a lot of people this morning really, really, really happy, enjoying, loving being that in Ethereum trade. Now up about 58, 59%. Absolutely beautiful. Lots of message this morning from CTM, just really being so grateful to be on the right side of such big trades and doing it with what? Not guessing. That's the beauty of it right there, is not guessing. Some interesting, beautiful stuff over here regarding what might be, let's say, a good portfolio, and it might include a certain positioning size of Bitcoin, a certain allocation to Ethereum, and then a certain allocation to, right now, Cardano. That's variable, right? But that's a good one to have in there to include. We were also talking about yesterday in Cardano, and then talking about how over time that might help flatten out the curve. I love all the work that you all continue to do. I really, really, really have never been happier about what's being accomplished here together. Similar to GBTC, right? GBTC getting you out in November a little bit higher. But if you are, what we have with CTM 2.0, whether it's on Bitcoin, whether it's on Ethereum or an altcoin, is absolutely astonishing. But if you have the ability, if you are someone, and many people are, right? Obviously, whatever the case may be, if you're following from afar, but need to know when to be in the market and when to be out, this solution right over here is absolutely astonishing. And then even on the 8 hour, it shouldn't be slept with. The reason I bring up the 8 hours, because we're now looking over these past couple of weeks as buy sides taking place. The 8 hour performance is absolutely outstanding. It outperforms CTM 2.0 during that period. That's not true. They're about the same. The drawdown on CTM 2.0 is less. And if you're able to trade this on the 8 hour, I do believe that you should be then executing on CTM 2.0, gold and Bitcoin, and where it's at. Right now here on the daily, it continues to be gold still is in that strong uptrend. But on the swing traders time frame, we're seeing a trend change occurring over here moving from that positioning off the lows in gold and now moving up towards Bitcoin gaining some momentum. And Ethereum, Bitcoin, just looking at that massive move taking place being seen over here. It was one of our I don't want to say our base cases because it wasn't, but one thing that we were watching out for when I lined up the chart of Ethereum and Bitcoin in past cycles and that space between them both during this bear market, it wasn't being closed. It was our opinion that once we saw any type of resumption, that again, it would just continue from there. It's what's happened, as well as Ethereum continues to run at this particular point in time, much stronger against Bitcoin. You could see it picked up here really well. It's beautiful. It's all beautiful, and there's beauty in imperfection as well. I know that we try so hard to strive for that perfection, but there's also that beauty in the human experience, that imperfection that we are, because we strive together to be better. All right, everyone. I'll see you all tomorrow. Thank you.